What is going on, little fuckers? Welcome back to another video. This is going to be another trade recap, trade breakdown for the day. All right. So first thing the first thing I want to talk about is the little mistake I did personally this morning that I obviously fixed. But every morning, every time I get on the charts, I tell myself, hey, dude, you got to stick to your model. You got to stick to your strategy. What you don't know is your failures, right? Now, obviously, I want to learn every day. I want to learn how to be better. But the only way you're going to do that is if you stick to the strategy or something that you understand. And sure, I understand price action, but I don't understand every other strategy. One of those strategy being the silver bullet. Okay, the silver bullet is fairly simple. I've seen it happen. It happens almost every day in the stock market. But there's a few requirements that need to happen for the strategy to actually work out in your favor and to have low risk, high reward, right? Now, what I've done subconsciously is use the silver bullet itself. So basically what it is a down move or an up move that creates a fair value gap. And then you have the 930 New York Open that taps into that institutional fair value gap. And then it keeps going wherever that fair value gap was pointing. So if it was bearish, the day would be bearish. You'd take a short. If it was bullish, it'd be bearish, and then come into the long fair value gap, and we'd keep going long, basically. And so that's what I tried to do today at 9:30. And as you will see in the video here in a couple minutes, I'll show you what I was trying to do, and it definitely did not work. Good thing I didn't call it out on the Discord. You guys would have lost. I would have been very, very upset. But after that, I went back to my strategy, my model. I noticed the high time frame PD arrays, and I noticed everything that happened today. And I was able to catch a nice little trade, and I'm very happy with what happened. And I will explain all of this right now. But first of all, let's go ahead and talk about how I predicted what was going to happen. Pull up a video real quick, and this is from literally yesterday. Already has 41 views, and just listen to this. Encroachment of this BISI is strong enough to bounce price all the way back to all-time highs. Another thing I want to show you is standard deviation back level. Okay, never mind. But it wouldn't even. So I missed the thing. But anyways, I predicted that price would come down into this BISI here, as you can see. Pretty sure I also said this on my Discord. I will pull it up right now. Give me 1 second right here. Let's see. So this was the move up. And then we had the, I said in my video last night, we saw the close under the high. And I would like to see the price action come down into the BISI. Now, this was this morning. And as you can see, the I fair value gap, or I guess it's just a fair value gap. It's not quite inverse. We did not close above, so I don't know why I did inverse. So it's just normal fair value gap, or a SIBI, if you will. As you can see, the 4 hour, we're on the 4 hour time frame because that 4 hour market structure shift. 4 hour time frame kind of starts dumping. This is good because price is heading where I want it to go. It's also heading in the direction that I want it to go, and look where it is. It's almost directly right above that BISI. Another thing that I noticed is that BISI is a little too big for us to come down to the consequent encroachment, because we would lose more than 50% of what we've already gained to come back to this consequent encroachment. So price either will hit some kind of area here at the top or consequent encroachment. It will not fill this whole fair value gap. So the OT was out of the question. We were not going to use the OT. We had to use some kind of fair value gap. And in my personal experience, I hate using big fair value gaps. I just hate them. The smaller and precise it is, the better. That's how I think of it. The bigger, like, look at this. If you have a huge fair value gap like this, and we're currently in this zone, in this zone, it sucks. I don't like this because you can't tell what's going on. You can't tell which levels are getting hit. It's stupid. I don't like it. So when this 4 hour fair value gap gets created, to me, it's just, oh my God, it's so much. I don't even want to look at it. Anyways, this morning, right, we got that down move, and this is what I want to talk about. So this is at, pretty sure it's 9:30. Okay, so 9:30 was here. We see that, actually, okay, I'll show you this first. We had this down move in pre-market from like 7:30, it looks like, to like 9. Very nice down move on the 5-minute. Again, this is not my strategy. This is just something I just came up with on the charts. I drew the standard deviation because I was like, oh yeah, if it goes down, it goes down to this. Drew my inverse fair value gap. So this was the institutional fair value gap. We could also sell that. 9:30 opens bullish, taps into that, and that's where you go short. Usually you target the consequent encroachment, but it looks like it just went short right away. Went short, and you go short, you go short, you go short. And I got stopped out because, as you can see, it didn't quite go down, because I'll show you on the 5-minute where it actually came in. So as you can see, here is the trade. Here's the standard deviation would have been here, and this is the wick. And unfortunately, as you can see, we get stopped out right away because the fair value gap was right here, and we get stopped out on these 3 last candles. The reason for that is because of this blue line and this 4-hour fair value gap, okay? Now, if we take a closer look out here, you'll notice that there's just a random line over here. But what I did is I went back to the 4-hour, and I said, okay, well, oh, no, you know what I did? You know what I did? I know exactly what I did. I said, if price, right? What I did. Okay. So usually what happens with these markets here is price doesn't just randomly come up like this. It doesn't just randomly start buying like this. It needs some kind of level to get its buying power from. Okay. So this would have been a very good trade if it worked out, right? So that means that we start dumping on the 5-minute, we start selling, and then we hit this level that's very weak or powerful. It doesn't really matter. And we get that 9:30 candle open here, 9:30 as you can see it. It gets bullish even more. It goes into this PD array, and then we short and we break this level. That would have been nice. That's what we want to see. What I was looking for is this level here, this support, this some kind of bullish PD array. And this was actually a 1-hour, like it was the tippy top of this. So as you can see, there's a fair value gap here on the 1-hour right here. If we just put this to fair value gap, I want to put this to like 25. As you can see, this fair value gap, actually, let's do, oh wait, no, I have it here. My bad, guys. Where is it? Where's it? Bonka? There it is. As you can see, this fair value gap actually, the price action closes above the consequent encroachment. We'll talk about that in a second. But that line was the very bottom of the fair value gap, which we've already basically traded into, and that's what I was looking for. And as you can see here, right, there's another 1-hour fair value gap that shows up right here in that 4-hour fair value gap. As you can see, let me delete this. In that 4-hour fair value gap, which is huge, absolutely huge, and it wants nothing of this consequent encroachment, absolutely nothing. And you can tell by the retracement of price. And the reason for that is because it hit that 4-hour fair value gap. It also hits that 1-hour fair value gap. It sweeps this 1-hour fair value gap, but it closes above that consequent encroachment, which shows 1, 2, 3 bullish PD arrays that are all lining up. Okay. Let's go back to the 5-minute real quick. So as seen with that, okay, what ends up happening is a 5-minute market structure shift. My strategy, or ICT's 2022 buy model or sell model, whatever you want to call it, teaches that you need some kind of high PD array or high time frame PD array. And what was that? The 4-hour is considered a high time frame PD array. This fair value gap, even though it didn't completely come down to the consequent encroachment all the way down here, let me delete this for a second. Even though this price didn't come down all the way down here and traded down here, which we would like to see, sometimes we have to go with what is given. You know, sometimes it's just, that's what life gets you. So if the market gives you something, you got to do something with it. Okay. So obviously we close under this low, as you can see here. We sweep this low, tag this, tag this high time frame PD array, And I want you to notice, this is almost like a manipulation move if you really think about it, okay? You have these accumulation lows. Now, it's not really accumulation. I will give that to you. It's really strong down move. But you can see that it does sweep. It raids this low, or this high, I guess. It comes down, and it makes you want to go short. And then it manipulates the price back up, and we go long, okay? Now, this was not, I didn't use quarterly theory. I've kind of completely stopped using it at all. But you can see on that fair value gap, this 1 hour fair value gap, look where it is. The consequent, I want to pay attention to the consequent encroachment. Let me delete this blue line right now. The consequent encroachment, where does it close above, right? If we look on the 15 minute, let's see, does it close above? Yes, it closes above right here, closes above right here. We can see that it's bullish. On the 5 minute, what did I notice? Right after we got this, I was like, oh shit, it hit a high time frame PDA. We're about to do a market structure shift. And why is that? Let me delete standard deviation. Let me just delete everything here, just so you guys can see this properly. On this simple chart, it doesn't look like much, and it really does not. But you can tell right now, obviously, you can tell, and I know you can tell, that this is Whoa, what the fuck? Wait a minute. I want to make it so it's like, something like this. You can tell it's reversing. Can you not? You can tell. And what I'm trying to catch is this. I'm trying to catch this move up to these engineered highs up here. All this liquidity. All of this liquidity I'm trying to get. All of it. Okay, and I'll mark it for you guys, so if you guys don't see. There's these highs up here that I'm trying to get. Then there's this high up here that I'm trying to get. And look how everything lines up. There's this high I'm trying to get. And then the final, I guess, if you look at standard deviation, is that high. Okay, that's what I'm trying to catch. So that's the strategy. And so what do I need? Okay, I need a market structure shift. I'm looking at the 5 minute. It looks pretty promising. Why? Swing high. We create all the way down to swing low down here. Okay, but that's a big range. If we look at the smaller range, you can see swing high, swing low, swing low, swing high, swing low. This swing low here creates that swing high. That swing high creates that swing low. And then from that swing low, we break this swing high. Okay, so it'd be right here. The market structure shift, if you didn't catch it, it's right there. Okay, so that's very tiny and simple. But what I like to see, obviously, is a very strong, and I mean strong, bullish candle. And it's not only 1, it's 2 and 3. It shows that it wants to get out of that range. If price doesn't show you that it needs to get out and it wants to get out, it won't, right? It just won't show you. So that was pretty nice. But I'm pretty sure we caught this on the, wait a minute. Actually, that's my bad. I didn't catch it on the 5 minute. I was confused on which time frame I was on. The 5 minute, yes, does have a market structure shift, as you can see here. Yes, it does. I was just very confused on which time frame I took this trade on. I took this trade on the 1 minute, my bad, because of the market structure shift on the 1 minute, not the 5 minute. But like I just saw during the video, there was a 5 minute market structure shift and I got confused. I had to switch it up a little bit. So yes, there is a 5 minute market structure shift. The only problem with this, right, is when you have, let me just delete this 1 minute. When you have this 5 minute market structure shift here, the only problem is you have this candle that breaks through and then you're looking for that swing low to that swing high, right? Only problem is when you draw your OTE or whatever you want to use, it doesn't get near that zone. So then what do? Okay, you look for fair value gaps or anything like that in the area. Maybe you go to the 3 minute. There's only 1, 2. There's 2 of them here from that 3 minute. So you can either do this and draw off this one, but this one doesn't even hit. So I wouldn't try this because it's on the 3 minute. But what I noticed was on the 1 minute. Let me come back up here. So this is the 5 minute. And then on 1 minute, what I noticed is that, yes, there's these highs up here, and you'll notice that very quickly. But these highs create that swing low. And if this is where I got to pay attention. That little swing low creates that little swing high right here. That's a swing high. Okay, so you mark this. Swing high creates what? Swing low. That swing low takes us out. Right? And then what do? If we want to catch this very small entry, we have to do our OT. Okay, which here in case lines up pretty nicely. And I've had this drawn, right? So you draw this when that second candle is basically formed. You wait for that break of structure. Once you have confirmation that price is going down, it breaks all these internal lows. You know it wants to come down. It will come down. This is great. It's all in your favor at this point. So now what I like to do is, instead of fully drawing the OT and relying on the OT, I like to maybe move from the 1 minute to the 5 minute, or vice versa, whatever I'm taking the trade on. And I would like to look for fair value gaps, or I'm looking for order blocks, or I'm looking for any kind of liquidity that could be resting inside this range. So the 1 minute here doesn't have anything I can rely off, except maybe this order block here that's created, and this is called an institutional order block, which it's in the middle of the displacement move. It's institutional, but it's on the 1 minute, so I don't fully trust it. But if you look, and I'm pretty sure if I'm looking at my notes, let me just pull up my notes real quick, because I tend to forget all the time order blocks and everything. So let me see, order blocks. If it's bearish, it's at the top. Okay, so if it's bullish, it's at the bottom. Okay, so I was wrong. But you can tell this order block here definitely had a little impact. You can see that price closed, literally right at the order block. But I'm not too worried about this order block because we're already in the golden zone. You can see that price hits that last level of OTE, which is pretty neat. Let's see if the OTV3 has anything. No, okay, so never mind. But yeah, let's go look for fair value gaps. Let's go on the 3 minute. Do we notice anything in this particular range that could be interesting? Maybe a fair value gap. Nope. And so if there's nothing on the 3 minute, there probably will be nothing on the 5 minute, because that's a big range for not much action. Okay, so back to the 1 minute, right? You're doing this very quickly. You're looking to enter. Now, what I like to do is I like to enter off the golden zone, right? No matter what. If price doesn't come down to it, it doesn't come down to it. And this is if there's no fair value gaps, if there's no order blocks. If there's something before it or in that zone, I'll enter off the PD array, not the OT. But as you can see here, there's no fair value gaps. There's nothing to confluence with price. So the only thing I'm looking to enter off of is the OTE. So I'm going to set my calls here, boom, at the OTE. And this is where the first thing I want to do is set my stop loss. Now, look at this. This is very risky because, yes, we did break structure on the 1 minute, right? Because on the 5 minute right now, we didn't fully break. On the 5 minute, this range came down. So 5 minute breaks on this candle. And this candle only gets created when we basically enter calls on the 1 minute. So that 5 minute market structure shift technically didn't happen quite yet. So that higher time frame, that just the time frame right above the 1 minute, hasn't quite changed the structure of its buy or sell program right now. So we could still be selling very hard. And what I had to worry of was, when I saw this on the 5 minute, was we swept this high, which could be turned into a market shift, but we swept it here, boom, right above, entered this fair value gap right here, and just dipped, created this candle, obviously opened right here, and we just fucking went down. And so this is exactly where I was scared. I was like, fuck. But this is where it was accepted, because my stop loss was just at this low right here, and it was accepted. If price came down and touched that low, I would be out. It was a bad trade. It was the most riskiest trade I probably took this whole week. Let's just be honest. Very, very risky because as you could tell, price only tapped into that 4-hour fair value gap like just for a tick or two. Look how much it needs to fill though. Like look how much it could have filled. A lot more. So I was risky and I was scared that price would want to come all the way back down, but that didn't happen. So lucky me, I guess, right? Lucky me. Anyways, stop loss is set, and then risk to reward, and then your targets. So what I say, you do the standard deviation. So standard deviation is from the swing low to the swing high. Boom. Let me do ins. No, we'll do soaps. Okay. Oh wait, I'm pretty sure. What was it again? Did I have it like this? Yes, I did. Okay. So what I had it set up as at first, I had it like this. So I had it on the standard deviation on the 1 minute, right? That 1 minute. And so my first target was this, the negative 2.25, the consequent encroachment. That's what I found out works probably the best for this. As you can see, the take profits are not quite lined up with the -1, but you can see the -1 here on the 1 minute, right, is lined up with this liquidity. You can see that has an impact. It's all lined up, man. -1.1 doesn't have a huge impact. It is lined up in this. You can see there's a tiny fair value gap right here. Might be hard to notice, but there's something here on the -1. -2, anything there, it's the bottom of a fair value gap. Anything here is just a big zone, so I'm not really too worried. It's right in the middle of a fair value gap. So you can see these levels are lined up, and that's what we're targeting. And this liquidity hits perfect. That one hits perfect. -1 hits perfect, right? Now, obviously, I'm watching this obviously on a higher time frame. I want to see what the 5 minute is doing now because I'm interested in the 5 minute. I want to see what the 5 minute is trying to do and what it will do. And so when I saw this candle close right here, above right here at 10:05, I knew damn well that this was a 5 minute market structure shift. So boom, I moved my standard deviation up one handle right here. Boom. So now my take profit is just a little higher, and guess where it lines up almost perfectly? At the inversion fair value gap right here. The bottom of that inversion, okay, or that just normal fair value gap, whatever you want to call it, okay? And the top almost lines up with that too. So it's looking like price wants to take out this whole fair value gap and want to inverse it so we could be bullish. Now, like I said, let's delete the OT. With these 5 minute, right? If you were to look for a re-entry, because they obviously tried to do that, the only thing I would be careful of is looking at the discount and the premium. So in this range, let's draw the range. Let's go from swing low to that swing high. Let's draw a premium discount. Where is this? Right here. Let's drag it out a little bit so you guys can see. Okay. So it did come down. You can see how it came down to what's called the premium or the discount, whatever you want to call it, on the 5 minute. Cool. Now you're looking to enter. If you were to, like, imagine you were trying to enter, maybe 3 minute. Let's see. Is there a fair value gap that's under the consequent encroachment or under or in the discount or premium? Yes. Where? Right here on the 3 minute. So let's just mark it. We're not going to enter off right now. We're just going to mark it. So we mark this. Now, can we go on the 1 minute and maybe find something else that could be more helpful or more precise? Because we like precise, remember? We like precise. We like precise. On the 1 minute, is there anything down here that could help us? Yes. There's another fair value gap right here, which lines up almost perfectly with the 3 minute. Let's mark that. See what happens. Basically the same fair value gap. I'm going to count the 1 minute as a stronger fair value gap here because it's more accurate. But there's also a bigger one here. Huge 1 minute here. Could also mark that. See what happens. It's on our chart. Okay. Now, personally, I would have liked to see price come down into this 1 minute fair value gap, right? But the fact that this 1 minute fair value gap also lines up with the 3 minute fair value gap, and it's right here, right on the consequent encroachment, right under the discount or premium, whatever you want to call it. And it showed very bullish price action because 1, 2, 3, 4, almost 4 bullish candles right away out of this zone, showing that it wants to break all these highs and really reach for that standard deviation. It shows me that any chance it has to start buying again, it will. So why sell all the way down here when you can buy right here and start buying all the way up? So again, and this, if this was your first trade down here that you took down here, then this would be your second trade, or you'd be re-entering for reaccumulation. But if this was your first trade, I would go really lightly, because this also is, it's maybe a more favorable setup, if that makes sense, because it's already showing that it wants to break out of the range. This is more risky because you're already you're in the range at that time. Here you're out of the range, you've broken out. You show the market that you want to break out. So it's a less risky trade here, but your entry might not be precise, as there's 2 fair value gaps and, God knows what, right? And yeah, that's basically it. You target that negative 2.5. You can see that it works out pretty well. Now, the reason why I target, and I always target, and I will probably always target the negative 2.5 for now, is because it is safer. Now, yes, you can argue, yes, we did hit that negative 2.5. Yes, I could have taken one more little profit here. But let me ask you a question, because this happened in my last trade. In my last trade, if I can try to pull it up, let's see. Let me try to pull it up here. This was it. See, in this last trade, the negative 2.5 is here. So what if I put my TP right here? It wouldn't have worked, unless I left like a huge runner, but I would have gone break even anyways. It wouldn't have worked. And you know why? Because price just didn't want to come up here. It only wanted to target negative 2.025. And if you really want to be safe, go negative 2, right? Already, when you're taking this trade here, I'm going to rough draft it, but here, and you have your stop loss super tight already, the 1-to-1 risk to reward theoretically is like here, basically, already, like just already. Like you enter the candle, it's probably here. Okay, so let me just show you what that looks like on the 1 minute. That means you enter your calls here, maybe not perfect entry, maybe your entry is up here. That means you enter off 3 candles, off 3 minutes, you already break even. So that means you'd hit your first take profit in a way. You'd have so much money, you hit your first take profit. Maybe it's your first take profit here. In less than 5 minutes, you've already hit your first break-even trade. So that means that you take profit, automatically takes profit, and then if it comes back to break even, you're in profit. It will just stop you out there. That's that. So if you want to play aggressive, sure, go for the -1, -1.5, -2, -2.5. Now, let me tell you something. The standard deviation has helped me figure out where trades could be going because of how they line up with the market. You can see when standard deviation is like this, for example, and these levels are like nowhere to be found with like levels at all in the market, it doesn't make sense. But when they're small like this, right? When they're small and all these levels line up with fair value gaps, they line up with liquidity, or they're in the area of liquidity, you know what to target and what not to target. So in here, what did I know? I knew that up here in the target area, right? The target area, this is my target area from -2 to -2.5. My target area was inside this fair value gap. So I knew that's what I wanted to target, because if price reacted off this 4-hour fair value gap, wanting to go bullish, where's the next external liquidity want to go to? That fair value gap. And guess where it went? Consequent encroachment, because it wants to go fill that. It wants to trade higher, so it wants to get to -4. And that to me makes sense. That -4 is really close to that low of here of that fair value gap, which means that we can definitely push up and break. That could be, I think that's the move. I'm not going to predict it because I don't want to make predictions here, but that's the thought that's going in my brain when I'm taking these trades, right? I got to think long term, where does this position want to be long term, right? As you can see, this is very just, I don't know. I guess you could call it that it's not algorithmic, or, you know, price is not manipulated or anything. You can say whatever, but look at this. Just look at this. I'm pretty sure. Let me pull up. If I do negative 3.5. Okay, so it's not quite there, but it's almost there. Look at this. See this high here that created a consequent encroachment, and then we went down? When we came back up, what did we target? Consequent encroachment, and we went a little higher, but to where? That high. Look at this wick. Look on the 1 minute. Look at it, bruh. How far did we go up? Barely, yeah, literally 0.1. Wait, 0.2. 0.2 ticks. 0.2 ticks to sweep that. Sweep this high that it previously created, and to come down all the way back down. I mean, if you can't tell me that's not algorithmically created, I don't know what to tell you. And if you can understand why that happened, good for you. And if you can take trades off of that, even better. But if you know what is going on here, you figure it out. I'll see you guys in the next one.